The Myth of the Rational Market is a book by Justin Fox that explores the history of the efficient market hypothesis, a theory that suggests financial markets are inherently rational and that all information is fully reflected in market prices. The book argues that this theory has been widely accepted despite a lack of evidence to support it and that it has led to disastrous financial crises. The book begins by examining the history of the efficient market hypothesis and the various economic theories that influenced its development. Fox argues that the theory was largely shaped by the work of economists such as Eugene Fama and Milton Friedman, who believed that free markets were the most efficient way to allocate resources. Fox then goes on to explore the flaws in the efficient market hypothesis and shows that financial markets are far from rational. He argues that bubbles and crashes are a common occurrence in financial markets, and that these events are often caused by irrational behavior on the part of investors. One of the key themes of the book is the role of psychological biases in financial decision-making. Fox shows that investors often make decisions based on emotions rather than rational analysis, and that this can lead to significant financial losses. The book also examines the role of financial innovation in shaping the behavior of financial markets. Fox argues that many financial innovations, such as derivatives and securitization, were designed to exploit the flaws in the efficient market hypothesis and that they have contributed to the instability of financial markets. Despite the flaws in the efficient market hypothesis, Fox remains optimistic about the future of financial markets. He argues that the key to avoiding future financial crises is to embrace a more realistic view of financial markets, one that acknowledges the role of psychology and innovation in shaping market behavior. Overall, The Myth of the Rational Market is a thought-provoking book that challenges many of the assumptions that underpin modern finance. Fox's analysis of the efficient market hypothesis is both rigorous and accessible, and his exploration of the flaws in the theory offers valuable insights for investors and policymakers alike. The book also serves as a cautionary tale about the dangers of blindly accepting economic theories without sufficient evidence to support them. Fox shows that the efficient market hypothesis was widely accepted despite a lack of empirical evidence, and that this led to disastrous financial crises. One of the most interesting aspects of the book is Fox's exploration of the psychology of financial decision-making. He shows that investors often make irrational decisions based on emotions such as fear and greed, and that this can lead to significant financial losses. The book also provides a fascinating look at the history of financial markets, from the early days of the stock market to the present day. Fox examines the key events that have shaped financial markets, including the Great Depression, the dot-com bubble, and the global financial crisis. Throughout the book, Fox emphasizes the need for a more realistic view of financial markets, one that acknowledges the role of human behavior and innovation in shaping market behavior. He argues that by embracing this view, investors and policymakers can better understand the risks and opportunities that exist in financial markets. Despite the flaws in the efficient market hypothesis, Fox remains optimistic about the future of financial markets. He argues that while financial crises are inevitable, they can be managed and even prevented through better regulation and a more realistic understanding of market behavior. In conclusion, The Myth of the Rational Market is a valuable contribution to the literature on finance and economics. Fox's analysis of the efficient market hypothesis and his exploration of the psychology of financial decision-making offer valuable insights for investors and policymakers, and his call for a more realistic view of financial markets is both timely and important. Overall, the book is a must-read for anyone interested in the history and future of financial markets.